and welcome to 7 Days in Europe. A new year, a new country holding the EU presidency, Ireland, but the same old problems. Still no banking union, although we do have the promise of a single supervisory mechanism, and several countries still with massive debts, high unemployment levels and little sign of growth. So what does 2013 hold in store? Here to discuss that with me is German Green Sven Giegold, who's a member of the Economic and Monetary Affairs Committee, so well placed. First of all, though, a yes-no section in which I ask a series of questions to which I'd like you to answer only yes or no. German Finance Minister Wolfgang Schäuble has said the worst of the euro crisis is over. Is he right?
No.
That's the view of Chancellor Merkel too. Is she just electioneering?
No, I wouldn't say that.
IMF economists now admit that the austerity measures they impose may have been too tough and the wrong thing to do. Are they right?
Yes.
US experts also say Europe has a problem with low productivity. Is that something we can correct?
Yes, in a certain way.
They also say we don't spend enough on research and development. Is that true?
Yes.
The banking union is taking a very long time to achieve, isn't it?
Yes.
Are you worried that, in fact, not enough has been done to prevent a repeat of the sort of banking crisis we had?
Yes.
Are you worried that anti-EU populist policies and thoughts are gaining ground in Europe?
Yes.
OK, I think we've just about run out of time with that one, but thank you very much indeed for taking part. We'll get to our roundup of the news next, and a proper discussion will come shortly. But can I just ask you, first of all, if you take an optimistic or a pessimistic view of 2013?
Generally, I always have an optimistic view, and without this, you can't do good politics.
But Chancellor Merkel has said, for instance, she thinks 2013 is going to be tougher than 2012 for many people.
Well, yeah, and that's why I would not say the worst thing is over. The worst thing is not over, because if you look at the poverty and unemployment rates in some European countries, you cannot say the worst is over. That's really a point of view of an astronaut and not of somebody who lives on the ground.
You feel that is there the political will to actually do what needed to be done, or is there still too much division, too much electioneering?
I think there's a lot of electioneering, and you can see this because some important things are simply not done. So on the tax haven side, nothing is happening. So all the adaptation is happening through taxes on the poor and spending cuts, but there are no taxes on people who could afford it, really. And second, there is a big hole when it comes to green growth. OK, well, we'll continue talking about this, Europe's economic woes, in just a moment. But here, first of all, is a brief look ahead to next week with Mariam Zaidi.
The first plenary session of the new year gets underway in Strasbourg next week. And, as with all new beginnings, comes change. It was farewell Cyprus and hello to Ireland as they take over the 6-month rotating EU Council presidency. Ireland has promised to bring new hope and recovery to Europe and, importantly, tackling the EU's debt crisis. Can Ireland be Europe's white knight? MEPs will debate the new presidency and the challenges it faces at the plenary on Wednesday. The economy will continue to dominate the headlines this year. High on the agenda for MEPs will be the creation of the EU's banking union and better provisions for credit rating agencies. The debt crisis has created division and discord amongst member states, and for an alliance built on the foundations of political and economic unity, uncertain times loom ahead for the EU. In what has been billed as the Year of the Citizen, can the EU come together to better protect the rights of the people it serves?
We have still got a continent where a lot of people are still suffering from poverty. I mean, your own party and the left generally have been saying all along that more should be done to stimulate growth. And yet we don't seem to be doing it.
Well, it's not a question of left and right. I think more or less the House here in the European Parliament agrees there has not been enough done to stimulate growth. What the difference might be, are you ready to use European instruments? What we have seen with the budget is the budget was cut, now basically, or at least not increased. And it was the cuts were made exactly in the areas which should deliver a sustainable growth. So agricultural policy and remains more or less untouched, and But what we need in research, in education spending, there the increases which were planned, which would have helped, were basically not coming. And the second point is whether you are ready, and there are differences, to grow the future economy. So the economy which is based on low carbon, which is based on little resource usage and turning around the economy in a sustainable way. And there we disagree. But in general, in the euro crisis, very little has been done to help sustainable growth.
We still have this problem with the financial framework for the next 7-year period. I mean, there's still a huge gap between the European Parliament and Commission's position on the one side and the Council, in particular, some of the more right-wing governments in Europe on the other.
Yeah, and that was what I was referring to. So in the latest compromise proposals, it's always the same pattern. You do not touch all the different stakeholders who have got money so far from this budget. Look, we put billions over the next period into a fusion reactor, which will never be applied in reality because it's too expensive. Everybody knows this. We couldn't put this money into sustainable energy, into energy efficiency research. That would be much more effective. So, but no stakeholder really is touched. And who is basically suffering from that? The ones who get jobs in the future, because they don't have a strong lobby. And that's exactly what is the problem. If you cut the budget and you cut it in a way that you basically simply serve still all the old stakeholders, like non-sustainable farmers, certain inefficient industries, and you do not do anything for the future, and you cut the budget on that basis, you do not help growth, and you do not help to get out of the crisis.
The banks, of course, got the massive bailout at the time when they got into crisis, and yet industry, particularly the smaller enterprises, are complaining that they're still not lending, and presumably that is also hampering the chances of growth.
Well, things are, I think, more complicated. In some parts of Europe, lending is very well. So there's no problem to get a loan in Germany or in Finland, or we have all-time record low interest rates also for company loans. So corporate loans are not expensive everywhere. If you are a small enterprise in Greece, in Spain, you have a lot of problems to get loans. And that's a problem. We should use European tools in order to increase the lending capacity. But for that, we need also a sort of stronger guarantee for that the Union as a whole holds together, and we have to make steps in order to share the risks of the Eurozone more strongly, like with the debt mutualization fund, which the Council has not agreed upon. The Parliament wants it with the majority. Some parts of the right were against, but we still had a majority for the redemption fund. But the Council was not ready to move into this direction to share more of the risk, so that the lending costs also go down in the weaker countries.
But with an election coming up in September in Germany, Angela Merkel can't afford to be seen to support the idea of euro bonds, as they're so often called, mutualization of the debt.
Well, euro bonds in the stricter sense need a treaty change, so nobody is talking about this. But a debt redemption fund, as it was proposed by the economic advisors of her government, of the Merkel government, this is blocked by the German government. It's true for electoral reasons, but honestly, Europe is a question of responsibility and not of party politics, gambling before elections.
Presumably also Germany itself stands to benefit most from Europe as a whole recovering, because Germany is the biggest exporter.
Well, it's not only this. Just yesterday, the government issued new bonds, and the bondholders were ready to pay something to Germany so that they could give the money to Germany. So we saved more than 60 billion of interest payments, only the government and local government altogether, since the euro crisis, because we have so low interest rates. So basically Germany is profiting as an exporter from low the euro exchange rate. So we could boost our exports, which also profited Portugal and some others, but we could boost our exports outside of Europe, and we had these low interest rates. So therefore Germany took huge risks. So in the central bank, one has to say 700 billion is a lot of money we put at risk as the Bundesbank, yeah. But for the risks, we got economic advantages.
Okay, I'm afraid that's where we have to leave it. Thanks very much indeed, Sven Giegold, for taking part, and goodbye.
Goodbye.
Hello. You're watching 7 Days in Europe. I'm Jim Gibbons. The rotating presidency of the EU has been taken over for the first half of this year by Ireland, appropriately, but coincidentally, I'm told, on the 40th anniversary of its accession to the EEC, as it was then. The Taoiseach, Enda Kenny, says he's focusing on jobs, especially for young people, in this Ireland's 7th presidency since it joined. With me to discuss it is Irish MEP Marian Harkin, who sits with the ALDE group in the European Parliament. And as always, we start with the yes-no segment, in which I ask a series of questions to which I'd like you to answer just yes or no. Is Ireland in a sound enough economic shape to take on the presidency?
Yes.
The Taoiseach, Eamon Gilmore, says he's optimistic on tackling youth unemployment. Is he right?
Yes, he's optimistic.
But is he right to be optimistic?
No.
The Taoiseach says Ireland will escape the EU IMF straitjacket this year to do with the bailout. Is that true?
Yes.
Many in Ireland, though, are still angry at austerity, aren't they?
Yes.
Was the last government right to make 100% compensation to unsecured Anglo-Irish bond holders?
No, and I can say it all day, no.
Ireland worked hard to overcome the debt crisis. Is it now still a model for other countries?
Yes.
This is going to be the cut price, the no-frills presidency. Is that also perhaps a model for the future?
Absolutely, yes.
And 40 years since joining, a lot less enthusiasm these days than there was before?
Yes.
OK, well, time is up. We say thank you very much indeed for that. In a moment, we have a short report on attitudes in Ireland. But first, can I just ask you if you do detect any signs of resurgent optimism in Ireland?
I do, yes. I get a sense of it. If you ask me to give you specific examples, I would find that difficult. But I do find a sense of a slight return of optimism. Even just before Christmas, people were spending a little bit more money, and that's always an indication of how people are thinking. I think there is also a sense that we have now reached a point that deals have to be done, that, you know, we're doing what's required for our own sake, and for Europe, but for our sake as well. But equally, we also recognise that we are now reaching a point where an overall deal needs to be done to give Ireland and Europe a chance to draw our breath, take that big deep breath and say, right, there's the future, we're going to go and shape that future. I think Irish people feel we have reached that point and we are looking forward with that kind of optimism to the future. I sincerely hope it's not misplaced.
OK, well, more on that in just a moment. First, let's take a look at this report from Paul Anderson.
It takes a brave man to launch a €5,000 high-tech box of tricks in the depths of recession, especially when the target European markets are countries of zero or negative growth, even if it is designed to save energy and reduce CO2 emissions. The miracle is it's happened in the midst of a banking crisis in which credit for innovative startups has all but dried up.
It was a case of having a very good idea, but the funding to get that to market not being available. So it was to look for an alternative model, an alternative route. So partnership and collaboration was the way we chose.
Now he and his partners have got through the worst of it, he has a message for the Irish government.
All policies at the moment are based around austerity, and I think we need to balance that with growth. There needs to be some sort of stimulus. There's lots of talk of focusing on jobs, but we're not really seeing the results of that anywhere.
Precisely what the Irish have identified themselves. 15% of people are out of work. In the 1990s, Ireland made a name for itself with high-tech R&D and industry. It gave academics, like one-time marine geophysicist Gavin Duffy, a chance to apply their science in commerce. He's fused his expertise in mapping and elevated photography with gaming technology. Success in a tough climate. So it should be too, he says, for Ireland's failing banks.
Bad banks should have been allowed to fail. It happens in business. Businesses fail all the time. Look what happened in Iceland. They let the banks fail, loans are written off, and they're back to 4 or 5% growth again.
Ireland says austerity has paid off. It says it can step out from tough bailout conditions later this year. Try telling that to the folk on the hill overlooking the city in Galway's rundown Ballybane district. The world of innovation has passed them by, but as they set up for a Christmas fair to fund cut community projects, the effects of austerity haven't.
Parents are not feeding themselves. If there's a choice between food for the kids and food for themselves, the children are getting the food. It's a God's honest truth. I mean, we see this despair on people's faces.
Ireland last had the EU presidency in 2004. Then it was about welcoming more new democracies from Eastern Europe to the EU family. Ireland does the business of welcome very well, but 9 years on, it knows it can't rely on a warm welcome alone.
Marian, it's not a very optimistic message really that's coming out of there. A lot of people obviously upset by the austerity measures, but also not seeing the growth that is really needed if Ireland is to really get out of the mess.
Yes, well, you made 2 points there. First of all, the austerity measures. Yes, a lot of people have really been hit very hard. But the one thing I would say is systems still work in Ireland. And while a lot of people have been hit hard, you know, the system hasn't collapsed. On the other hand, you know, you talk about growth and how do we get out of this. We're a small open economy and we are relying hugely on what is happening at European level, what is happening at a global level. And unfortunately for us, that remains stagnant. But some of the people that were there in the clip, they talk about the difficulty of accessing finance for their business. And that's a major issue. I know it isn't just an Irish issue, but it's a major issue at home. And people quite rightly look and say, we bailed out these banks. 64 billion euro. Now, that doesn't sound like a huge sum of money to many of your listeners, but if you remember, that's just over 4 million people. If you were to translate that same bank bailout to Germany, for example, with 80 million people, it would amount to 1.2 trillion euro. I wonder how many Germans would see that as something that's sustainable. So anyway, Irish citizens have taken on that. And yet, at the same time, their banks don't function. They're not loaning to the real economy. Those people that you interviewed, they are the hope for the future. When I meet people like that, that's what gives me hope. That's what gives me, you know, a belief that the future can be better than, the situation at the moment. But unless they get the assistance they need, then, they cannot contribute to that growth that we so badly need.
There is talk about the need really to do a bit of a debt write-off, not just for Ireland, but particularly perhaps for Greece. The German Chancellor has said absolutely no to that, and Germany seems to have hardened its stance against that. I mean, there is this division between the haves and have-nots in Europe.
Yes, Germany seems to have hardened its stance, but we also have to remember that there's an election coming up in Germany at the end of this year. So nothing is ever just quite what it seems. And that's part of the equation as well. But also I believe that, the Germans are pragmatic people. They want the Eurozone and the EU to succeed, as we do, as many others do. So the question is, how do you get from where we are now to a position where the EU and the Euro is a sustainable entity? And part of that process is painful. And Jim, it's painful for everybody. It's there's no good guys and bad guys in all of this. We're in it together, or we're not in it at all.
The Taoiseach, Eamon Gilmore, has said also he sees Ireland presidency as a chance to act the part of the honest broker, to keep the UK on board, as there seems to be this growing tendency in the UK to want to leave the EU. How successful can he be, and how important is it for Ireland?
Well, it's very important for Ireland because the UK is our closest neighbour. It's a huge trading partner. And, despite our history, we have many things in common. So if you even look to when we joined the EU, it was at the same time. So therefore, it's very, very important to Ireland that whatever relationship Britain has with the EU, that it's a positive one and that it's not constantly withdrawing from the EU, not just from an economic perspective, though that is hugely important, but also from a social perspective. Remember, part of our island, Northern Ireland, is under the jurisdiction of it's part of the United Kingdom. So there's a whole load of issues there. And certainly because of what we might call the newer or the closer relationship between our two countries, I think many Irish people believe that a semi-detached UK from the EU would not certainly be good for Ireland. I actually don't think it would be good for the UK. But then, of course, you UK citizens have to make their own decisions.
It's going to be an interesting presidency. Thanks very much indeed, Marian Harkin. I'm afraid we have run out of time. Ireland's previous presidency, of course, have been very productive, with Irish ministers proving remarkably able to persuade other people to their point of view. It'll be interesting to see how they manage this time in straitened circumstances. That's it. Thanks very much indeed for watching. That was 7 Days in Europe, and goodbye.